Venkatash Balasubramaniam, who is Managing Director and Head of Research at JM Financial, Johnson, with his thoughts on earnings, on market levels, on budget expectations and more. Venkatesh, great having you. Thanks so much for taking the time out. Can I start off with the budget question though? Could it well become a market sell-off event in that everybody is hoping, as everybody hopes every year, that budget mein kuch to niklega, right? Something magical will happen. But the fiscal hands are constrained this time, both on the capex and the consumption spends, right? So if neither happens because the government has to stick to the glide path, are we looking at a market disappointment event in terms of the budget?
Okay, firstly, thank you for having me on your show. So now coming to the budget itself, I think just like every year, a lot of people have a lot of wishful thinking and expectations. Let's look at things in one by one. Firstly, have a look at consumption. Whatever the government could and had to do on consumption, they have already done pre-budget. Income tax rates have got cut at the beginning of last year. What the government has also done is that they have rationalized GST, which has given a big kicker to consumption. The RBI has cut rates. Liquidity has been infused into the system, which basically has given a big fillip to consumption, especially on the discretionary side. And you're already seeing that on the auto side. I think this quarter you will again see that on the staple side also. Now, I don't think the government can do anything more when it comes to consumption. If you look at our nominal, while our real GDP growth has been extremely robust, nominal GDP growth has been on the slightly below expectations, coming in closer to around 8 to 9%. As a consequence, what has happened is tax revenue collection so far in the first 9 months has been on the weaker side. What I remember is the budget for this year is almost closer to 11 or 12%. Tax collections has been much below that level. So there is very little fiscal space to do anything big bang in terms of further tax cuts or, increase capex. If at all, if you have to stick to the fiscal deficit target, which we have at the end of the year, you need to cut back on capex. So this is what we are worried about. I don't think there is too much room to do anything big bang in the budget.
Okay. So therefore the question remains, Venkatesh, what do you play for in the first 6 months for the Indian markets, right? Because there is the budget, then and then May has these 2 or 5 state elections, 2 or 3 of which are big ones as well, post which there is a relatively light calendar. So therefore, until May, post budget, what do you play for? Is it an earnings strength led thing, or does it have to do with maybe some of the deals that India may sign, not necessarily with the US, but with the EU, with some of the other countries as well?
Okay. Now, we think at this point in time, the best sectors to be in is basically going to be consumption. One of the best plays out there is basically auto, followed by even consumer staples. Auto numbers, as you know, are doing extremely well already. FMCG numbers were not doing that well in the September end quarter because there was a GST-led disruption, but numbers will be much better in the current year. Internet is a good play. We like a couple of stocks there, basically Paytm and Nykaa. We are also very positive on hotels and real estate. This is the best way to play consumption. At this point in time, we are underweight private sector banks because this whole year numbers have been on the weaker side, primarily because RBI's interest rate cuts. Most of that, I think we are towards the end of the interest rate cut cycle. So I'm not telling go aggressive on banks even in the fourth quarter, but perhaps at the beginning of next year, given that you will have the weak base of the current year and valuations in banks are very, very benign. Next year, somewhere around, let's say, May or even June is a time when you start getting a little more aggressive on banks. Till end of March or early April, we would still say stay underweight banks. Perhaps somewhere around May is when you go overweight on banks.
So that's the view coming in when it comes to the banking space as well. But Venkatesh, let me take this conversation forward here on this side with banks as well. If you have to look at the PSU and the private sector banks and what's happening and the opportunities that are coming in from the NBFC space as well, what would be your pecking order within the BFSI space then?
Okay, clearly we have a preference for NBFCs and non-lending institutions.
Okay.
We don't have a preference for private sector banks or government banks at this point in time. Interestingly, in our model portfolio, we are underweight both HDFC and we are underweight even SBI. We still have a preference for ICICI Bank, Kotak and Axis. These are the three banks which we like. But overall, private sector banks, we are underweight. We like NBFCs. We really like Aditya Birla Capital. We like some of the other smaller names like Nuvama or even the likes of 361. We also like PNB Housing because we think PNB Housing is very cheap and they're delivering numbers. So these are some of the names which we like. So clearly preference for NBFCs and the non-lending financials rather than going in for the banks. We are a little careful on both private and government banks.
Okay, so that's with regards to the banking space as a whole. Now, the other question I have for you is if you have to look at the valuation gap as well currently, I mean, in terms of the current valuations versus the earnings that have been reported so far, I think the earnings are slightly better than what the street was estimating. Anything changes, and if anything changes basis your calculations as well from here on, what is that sector that you think could be a driver? Because a lot of people are talking about IT being the sector of 2026.
See, our view at this point in IT is basically a trading sector in the sense that, if numbers are beating expectations, you buy IT, but you need to, once the stocks go up, you need to book profits. We are worried about IT from a structural perspective, and that is why we are underweight on the sector. The rise and the continuous rise of GCCs in India, and the fact that the advent of AI, both are huge structural negatives for IT. So we remain worried about IT. IT sector, medium term, we will not expect more than mid-single digit kind of growth. So we are underweight on IT. Maybe valuations at the beginning of the sector was a little bit on the lower side. A few of the IT companies have delivered slightly better numbers. You could possibly trade in, but we would not advise anyone to get aggressive about IT sector as a whole, especially the large cap IT. You could still maybe make some decent money over a 6-month, 9-year period with the mid cap IT, but large cap IT is not something which we are very positive on.
I'm inclined to talk about one bucket which doesn't necessarily have very large coverage, but maybe you have your own thoughts on it, Venkatesh, and that is PSU banks. Since 2020, actually, since COVID lows, PSU banks have outperformed their private peers by a significant margin as well. But I was looking at the recently reported numbers, and I think, if I'm not wrong, the median PAT growth is nearly double digits for the PSU banks, even in this quarter. So good reportage thus far. Is it giving you an opportunity, or is it now past its really attractive valuation levels?
See, I think it is giving an opportunity, but I would still advise don't get aggressive right now. Hold on for another, we are in January, hold on for another 3-4 months. Maybe you could get aggressive post April after the fourth quarter results. I don't think, I think actually you should wait till May because the results will get reported. Annual year results don't get reported immediately. So perhaps post May, I am a little worried that the fact that even in the month of December, you've had another round of interest rate cuts. So I think it can impact numbers. So wait out for at least May before you get aggressive on banks.
Okay, so, there is an opportunity probably that's lying with the PSU banking space as well. Thank you so much, Venkatesh. Always a pleasure to speak to you as well.